We have dealt with trade, Mexico, trade, China, and we've dealt with the market sell-off. Now I want to deal with that. Interest rates way down, 2.17% on the 10-year Treasury as we speak. Jeff Sica, market watcher, still with us. Why are they down so much?
Well, because the expectations investors had was that we would have a solution to the trade issues with China, and that would help the markets and interest rates, and the economy would start to pick up. Interest rates would move up in tandem.
Yep.
Now that all hopes are dashed for a short-term solution, interest rates continue to go down. And I had said at the beginning of the year that don't be surprised if we see 2%. We could see under 2% in the Treasury bond. And what that means is that a lot of investors that sought diversification through bonds are getting yet again starved out of yield. Now, if they are going to, in fact, go into stocks, move stock prices up, that's a good thing. But we'll know that we're in trouble when investors continue to go into bonds and abandon the stock market out of concern. That's what the bond market is telling us. And we have to pay attention to the bond market. When you listen to the bond market, it will speak of the future of the economy. And the bond market is telling us that we're seeing a slowdown, not as much in the U.S., but globally, we are seeing a legitimate slowdown that needs to be dealt with.
Dear viewer, bear with us, because I want to talk about something that's very technical. Negative yields.
Yes.
I mean, there's $11 trillion worth of bonds out there in Europe where you give the government the money, they don't give it all back to you.
Well, not only that, in Japan, they have their junk bonds are yielding 1%. So low credit quality is yielding 1%.
And that's a signal that the global economy is really slowing down.
The global economy is slowing down. Currency is in jeopardy.
And if you want a safe yield, you come to America and buy a 10-year Treasury and you get 2%.
Yeah, and people get starved out of this bond market and buy stock. That is not the best way to move the market up, but that's what's been happening. And there's not much more starvation that could happen before investors start to look to the fixed income market as an alternative.
Jeff Sica, thanks for being here. Important you were, and we appreciate it. Thanks very much indeed. Now, President Trump taking...